We have the Fed minutes and we have some details on the Fed's outlook for the balance sheet reduction and on 50 basis point moves in the future. First, the balance sheet. Market participants have been looking to this. They anticipate starting balance sheet reduction as early as just after the Fed's meeting in May. So that could come up very quickly. Monthly Treasury caps, they looked at a range of scenarios and decided that $60 billion would be a good cap for the monthly Treasury reinvestment level. Anything over $60 billion running off would be reinvested. $35 billion for mortgage-backed securities. Those could go up. The third line, it is appropriate to consider mortgage-backed security sales. And that is something that may be a bit of a surprise to people in the markets. They said once the program gets established, this won't be off the top, they will consider it and they will give plenty of notice if they are going to do MBS sales. Then in terms of the 50 basis point, 25 basis point debate, the minutes say that the number of participants decided that they would like to go 50 basis points. But in light of greater near-term uncertainty associated with Russia's invasion of Ukraine, they judged 25 basis points would be appropriate at this meeting. Many said they would envision at least one, maybe more, 50 basis point increase in the future at future meetings. So hawkish Fed is certainly given the comments on raising interest rates, and now we have some detail on how they want to get rid of the balance sheet or start to bring it down.
And Mike, we're certainly looking at yield stable, at least on the 2-year yield. You're still looking at declines of about 2 basis points on the day, trying to hold on to about that 250 level. Similar moves in the 10-year yield. You're still climbing higher by about 5 basis points on the day or so. So we look at the reaction, of course, within the bond markets. And I think the big question, as you rightfully pointed out, was some talk about the rates, but also big talk about the balance sheet. How do you view sort of this plan for the reduction of the balance sheet relative to previous QE and then QT seasons or cycles?
Well, it is faster, certainly, if they do begin it in May, and they could begin right after the May meeting on May 4th because they have a series of auctions coming. The Treasury will have a series of auctions coming up the week after that. But in 2017, they announced the details of their program and in June and didn't start it until October. So they're going to get started a lot sooner. And of course, the caps are going to be higher, so they will be more aggressive in selling off. But then this is twice the level of reserves on the balance sheet that they had back in 2017.